Now it's indicating the next rapid price movement in the range of $100,000 per coin. Gold is a fiction and doesn't exist, and the third stage should come after passing the 20,000 mark. Glad to welcome you to the Coin Post channel. Despite all the fears due to the possible Bitcoin dump and the desire of many to buy at 6,000 or less, it continues to go up, and the price has already exceeded $8,000. But I'm not gonna claim that now we'll be flying directly to the moon. There are no grounds for this to happen. Nevertheless, there are factors that, according to a number of authority figures, like Plan B crypto analyst and billionaire Tim Draper, should soon have a significant impact on the price of the first cryptocurrency. I must say right now that the reasons given in this video are not 100% proof of the bright future for Bitcoin. And I don't want to be among those bloggers that, based on some kind of schedule or events in the past, promise you a guaranteed moon. But if you consider cryptocurrencies as an asset for investment, then you should definitely take into account these factors. I would add that you probably heard about them earlier, but I'll try to look at these points from a different perspective in the light of events taking place in the world. Join our community, subscribe to the channel. Let's begin. The countdown to the third Bitcoin halving has already been going on for days. And according to the Plan B crypto analyst, this might be a serious incentive for the price increase. The amount of Bitcoin available for buyers might be far less than we think, and the 1,800 available miner coins per day is going to 900 in about 18 days. He also points out that most people buy the first cryptocurrencies as an investment, that is, for a long time, and don't plan to sell it in the next 6 months, a year, or even 2 to 4 years. Such people, according to his survey, make about 81%. For those of you who don't know, Plan B is the creator of the stock-to-flow Bitcoin model, which displays the relationship between the price and new coins issue rate. Now it's indicating the next rapid price movement in the range of $100,000 per coin as a result of the third halving. But we must understand that this will not be a one-time price increase, as the stock-to-flow model only indicates an approximate direction. In its defense, I must say that it has successfully worked throughout the history of Bitcoin. However, there is no guarantee that it will be so in the future, because such an approach to assess the value cannot protect the asset from strong shocks, for example, a government ban or a special dump by large players. I'm saying this not because I don't believe in Bitcoin. I'm fine with that, but because I want to draw your attention to the presence of potential risks in the cryptocurrency market. It's also important to note that reducing the daily issue of Bitcoin as a result of having from 1,800 to 900 coins doesn't guarantee that miners will immediately drop fewer coins on the market. There are two important things here. Firstly, the sales of miners depend on the cost of Bitcoin mining. The higher it is, the more cryptocurrencies they are forced to sell to cover their own expenses. Secondly, it's much more profitable for miners to sell Bitcoins through over-the-counter platforms for large buyers with a margin of about 25% of the market rate. It's a reward for pure Bitcoins without history, which were definitely not stolen anywhere, didn't appear on the darknet, and didn't go through fraudulent schemes. But right now, a lot of miners, according to the miners themselves, are just on the verge of breaking even and are obliged to sell almost all the mined cryptocurrency. Therefore, Plan B's got a point, and the flow of new Bitcoins immediately after the halving should be declined. On the contrary, demand will grow, affected by the following. In light of the economic crisis, Bank of America raises gold forecast by a whopping $1,000 to $3,000 because of zero rates. Bitcoin supporters immediately responded that for the first cryptocurrency, this should be a great chance to prove that it's not called digital gold for anything. Here's what the billionaire Tim Draper thinks about that. Such a crazy flow of new money to the markets will reduce their value. At the same time, the number of Bitcoins will always be 21 million. BTS is safe in a way that no one will dilute it with some political manipulations. Gold is great for jewelry and is used in the manufacture of certain types of electronics, but it's bulky and heavy. Buying a cup of coffee for gold just doesn't work. Therefore, using Bitcoin as a currency is much easier. For those who are subscribed to our channel, especially if you turned on the notifications and don't miss new videos, there is nothing unexpected in the words of Tim Draper. I've repeatedly said that the scope of Bitcoin adoption is constantly growing, and it's long been used as a means of payment. But if you have a gold bar, then you won't be able to buy bread at the supermarket with it. Did you know that in fact gold is a fiction and doesn't exist? I know it sounds nonsense, but let me explain everything. We constantly swear at the central banks and fiat currencies because the former issue the latter in unlimited quantities. And you definitely know about the 10% rule that the bank holds in its assets, and the rest of your money in the amount of 90% of the account balance has long been put into use. That is, of the money that's indicated in the card balance, the bank actually has only a small part. They just don't expect all the customers to come and collect their money at the same time. So when you get a salary and immediately turn it into cash, the bank is fine. After all, people like you make no more than 10% and have trust in storing their money in the bank. Therefore, they can always cover from someone else's pocket. Do you think the same could be happening to gold? After all, its main advantage is limited emission. Do you think all the gold that is now traded on exchanges, does it exist or not? The trick is that the market has a lot of so-called paper gold that is protected by the shares of gold mining companies or the metal that is still hidden in the ground. People buy paper gold because they don't have to store it themselves, and it can always be quickly converted into cash through the exchange. In practice though, if all the owners of such a precious metal want to take their bars, then this gold will have to be dug out of the ground for several decades. So it turns out that the gold you buy on the exchange and store on your account is no better than the numbers in online banking. Bitcoin is safe from such manipulations because only 21 million coins will be issued, and you can check the presence of each of them, and you can also use them at any time. Bitcoin is the most transparent financial system in the world, but since money is involved in it, there are psychological factors for the price increase. Next, let's talk about FOMO, fear of missing out. The loss of profit syndrome was very much the reason for the growth of Bitcoin to $20,000 in December 2017, and it's likely to have a say in this again. The factors cited earlier in this video indicate the simulation of the exchange rate, which should take it out of the current price range and lead to a new historical maximum. But if we want to go it to the moon, with Bitcoin price of $100,000 or more, the market needs a perfect FOMO. I dare to suggest that this time FOMO is gonna go through several stages. Besides, with the release of Bitcoins at above 10,000, those who are still waiting for cheap Bitcoins at 5,000 and below will start buying. Then, after we break through 15,000, we will be joined by the people who were severely punished during the collapse in the first half of 2018. But seeing a chance to take 20,000 for a coin again, many of them will try to get even. And the third stage should come after passing the 20,000 mark, and most likely even $30,000. Then the fuss about Bitcoin will again become widespread, and everyone will want to hit the jackpot and go to the new moon. And who cares that they should have done it yesterday? Then emotions will speak for people, and the most important thing for us will not be taking our time, but taking profits in time, because the transition from parabolic growth to a new collapse will be unexpected and inevitable. But you still need to make it to those events. So for now, you shouldn't really worry about those. Everyone who is going to remain faithful to Bitcoin, at least until the next moon, I invite you to subscribe to our YouTube channel. And that's all for now. Thank you for watching the Coin Post channel. Subscribe and get enlightened.